Join fast, everyone. Hi, hi. Good evening. Good evening, Murugraj. Hi, everyone. Join fast. Chala. So, welcome to the first day. Right? Welcome to the first day. Hi, hi, hi. Neelam, Venki, Rebecca. Good evening. Voice is okay? Echoing? Is the voice echoing somewhere? Anyone? Voice is okay now? Chala. Just check at your end. Who's this? Rebecca. Okay? Just log out and log in, Rebecca. Then it'll be okay. Chalo, today is the first lecture, so I'll be conducting it for 1 hour. Okay, up to 9. From tomorrow, we having from 6 a.m. to 8 a.m. Okay, 6 to 8, and in the evening also we having some 8 to 9, I think so. Actually, 3 hours is not needed, but then also, let's see. How many of you have joined new? Who are new over here? Newly joined today. Who had not joined earlier? Not for ABM, not for any other class. How many of you have joined new? Because, why am I asking you? Because I share the PDF in the group, WhatsApp group. So that's why kindly join the WhatsApp group. Okay? Kindly join the WhatsApp group. Okay? How many of you have new? Say this. I'll share this link. Join this WhatsApp group. Seshu joined. Vidya joined. Sunil joined. All those guys who have joined new, kindly join. Okay? Manas Sharma, your BFM PDF is sufficient to clear. Was it sufficient to clear for ABM? Yeah, Manas. Was it sufficient to clear for ABM? Ask those. All of you guys who were there since earlier ABM. How was the PDF helpful? Because I've seen all the questions from that PDF only. Somewhere here, this, that. I'll tell you, don't go beyond the PDF and don't go beyond my lectures. That's enough. Okay? That's why I'm saying, see here, I told you with challenge at that time also. In ABM also I told you. And those who are there in your JIB, RBWM, there also I told you. That don't go beyond that. Because see here, I'll tell you frankly why you shouldn't go beyond it. Because I've taken that PDF from your book only. All the important points, all those books, I've gone through your books for around 4 to 5 times at least. Each book, 4 to 5 times. And then I've taken down those points. So that's why you need not go beyond anything. Just go through that PDF. Yeah. No problem, you'll clear it, Vidya. But why didn't you join the regular batch then, Vidya? You should have joined the regular batch, na? In regular batch, it is covered in details. See, here I'll be covering only numericals. I won't be covering the theory because it's not possible. Okay. Today I'll be giving you some details. Okay. Yeah. So, see here, all of you should have joined the regular batches also then because that's what is important. No, I have it for only my subject. Okay. Kasi Reddy, I am having it for only, see here, I am, all of you guys kindly note, I am having the PDF only for my subject. My subject means ABM and the BFM. Okay. Yeah. No, join the regular batches. Where whoever is having only one subject, you should have joined the regular batches because what happens in regular batches, you get detailed study. This is what 10, 14, 10, 12 days studies. Regular studies always pay you more. They are always beneficial. Chalo, let's start. Say this. Let's start. Okay? Yeah. Enough, enough. Samiksha, enough. Balance of payment. See this. Today I'll be covering some theory part, from tomorrow directly numerical. 6 a.m. morning. So factors determining exchange rates. So what are the factors? Firstly, what is exchange rate? Understand this, because I'm taking the basics. Because you need to understand this, only then you'll understand the module A. So factors determining exchange rates. What are the exchange rates? Firstly, balance of payment. See, exchange rate means what? Whenever you have two or more currencies, then only you will be having the exchange rate. If you don't have two or more currencies, you have only one currency, you are dealing in rupees only, then where is the exchange? There's no exchange between the currencies. Okay? Currencies exchange takes place whenever there are two or more currencies. Okay? Yeah, I'll share it, Shivaram. I'll share it in the group. Join the WhatsApp group. Okay? I'll share it there. So currencies exchange rate is possible whenever you are dealing with two or more currencies. Okay? So what are the fundamental reasons? See, there are two types of reasons. Okay? Bang, bang. Yeah, correct, Sohini. See, there are two types of reasons. One is fundamental and second is technical. Okay? One is fundamental and second is technical. Kindly join this group, Bojeshwari. Join it using the link. So one is fundamental, second is technical. Okay? Fundamental means what? Long term. Basics. Fundamental means basics. It's like the longer batch, and technical is like the crash course. Fundamental is like the longer batch. Okay, so that's why I said join the longer batch. Basic. Okay, so that is a basic. Here also it's the same thing. Technical reason, fundamental reason. In fundamental reason, you have balance of payment, economic growth rate, fiscal policy, monetary policy. Now, what is balance of payment? What is balance of payment? Hmm? See, there are two types of balances. One is balance of trade, second is balance of payment. See this. Let me show you. See this. Balance of trade, balance of payment. Two types of this balances are there in any country. Not only in our country, it's in any country. We have two types of balances. Balance of trade, balance of payment. Balance of trade means here you have only import export. Trade. Name itself says trade. So import export. It's like the current account, isn't it? Trade. It's the current account where you do the exports and imports, and whatever is the net is your figure, net figure. Okay. So balance of trade, balance of payment. Balance of trade will be having only trade, import, export, and current. It's like the current account. Now, one thing you always note. Okay, I'll explain you balance of payment also. What is balance of payment then? Remaining. Remaining means where there is no trade. No trade means where there is no import export. That is balance of payment. So what is there? Where there is no import export. Where do you have no import export? Tell me. There are many things. NRI sending funds. NRI. An NRI living in USA, some other country, sending funds to our country, Bharat. What is that? Is there any trade? No, right? So that FDI, foreign direct investment. Is there any trade? Do we sell anything? No. Funds comes from there and it's logged in, means parked over here. FPI, foreign portfolio investment. Is there any trade? No. What does FPI do? See, understand the difference between FDI and FPI. That is also, some of you might not be knowing this. FDI versus FPI. FDI means what? It is basically the investment, a foreign direct investment. It is basically the investment in the factory. You set up a factory over here. That is FDI. Okay? You set up a factory over here. Yeah. Capital investment. Very good, Venki. So factory over here. You employ people, you have machineries, everything. FPI means what? Nothing. Just I'll take the money, put it in the stock market or the bond market. Here, not only stock market. It's called as capital market. So it includes your stocks also, it includes your bonds also. NRI sending funds, ECB, loans, ECB, that is also part of your this balance of payment only. Okay, loans and ECB, that is also part of your balance of payment. Okay, so all these are the parts of your balance of payment. LRS, liberalized remittance scheme, that is also part of your balance of payment. So understand the difference between BOT and BOP. Okay, so in the end, okay, one more point. In the end, whatever is the balance in the balance of trade at the end, that will be transferred to balance of payment. Okay, so net balance of trade will always go to balance of payment. Net of balance of trade will be fully transferred to balance of payment. So main is always balance of payment. Okay, so balance of payment, generally a surplus leads to stronger currency while a deficit leads to weaker currency, isn't it? If you have a strong balance of payment, then you'll have a stronger currency. Look at our country. In our country, we are having huge. Our balance reserves are today. Yesterday, I saw they are around 800 billion. 800 means huge figure. Okay, 800 billion. So, World Bank says what? Any country who has 9 months of imports is in the strong position. Means the money for buying 9 months of imports is in the strong position. So we have imports of around 41 billion dollars per month, oil and everything. $41 billion per month, and 4 nines are 36. We are having 800, so we are way ahead. So that's why we are very strong in balance of payment. Okay, so that's why our country is growing, isn't it? Because it's stronger. Everyone is trying to invest in our country only. So economic growth rate. How do you define this economic growth rate? That is defined by GDP, gross domestic product. That's actually a wrong figure nowadays. Nowadays that is also challenged. GDP means what? What is the formula for GDP? G plus I, right? G plus I, right? Then what? Plus C capital plus X minus M, right? X minus I something. Exports minus imports. Government spending plus private investment, right, plus consumption plus X minus I. That is basically a GDP, isn't it? Government spending plus investment by private. See, always remember this. These logic should be very clear to you. This is government, I is private. This is by the private investment, private. This is consumption. This is by the individual, you and me, consumption. And this is export minus import. This is X minus I, means export minus import. So your GDP is measured using this formula, G plus I plus C plus X minus I. Okay, but this is being challenged now. It is a wrong figure they are saying. So nowadays the within next 4 5 years GDP will change. We won't have GDP. They are calling now G something GEP. Some new term is coming up, GEP. Okay, let's see later. Now it's CIB only. For CIB, you focus on GDP. Okay. Fiscal policy. So fiscal means what? There are two types of policies. Kindly note. In fact, three types of policies. See these three types of policies: fiscal policy, monetary policy, and there is one more policy which is not given over here. That is called as EXIM policy. Okay, fiscal and monetary and EXIM. EXIM is given by Ministry of Commerce. Okay, and fiscal is given by our government, finance. Monetary is given by RBI. So three policies are the important policies in our country: fiscal, monetary, and EXIM. Okay. So fiscal is given by government, finance minister, budget. Okay, budget. Suppose if government wants to expand means what? They want to increase the money supply. Okay, in the common man's hands through fiscal policy. What will they do? They'll reduce the taxes. Okay, increase the rebates. Rebates means all the subsidies, everything. They'll increase it. Okay, so that is basically this fiscal policy. Okay, so expansionary fiscal policy means the taxes are reduced and rebates are increased. Expansionary fiscal policy, that is given by government. Monetary policy. Monetary policy is given by RBI. Suppose if RBI wants to expand this, what will RBI do? For expansionary monetary policy, RBI will do what? Repo will be decreased, CRR will be decreased. These two rates will be decreased. So it becomes an expansionary policy. Okay, expansion means what? Money goes in the hands of the common man. That is basically expansion. Okay, so these are the two main policies. Exim policy is there, but you are not concerned with that much. Okay, fiscal policy is always long term. Okay, fiscal policy is always long term. Monetary policy is always temporary. It's never long term. RBI's job is always temporary. RBI's job is not a long term thinking job. Kindly note this. RBI will always support the government. See, our monetary policy of government, RBI will always support the fiscal policy of government. Always. It's never reverse. Okay. Main is the fiscal policy of government, and then RBI will support it. Got it? So fiscal policy and monetary policy by RBI. So expansionary policy lower the taxes. Monetary policy the way by which central bank attempts to influence. Central bank means RBI. Influence and control the interest and money supply can impact the value of the currency of the country. So basically, this is RBI has only two tools in the hand. Mainly, main two tools are there. One is your repo, second is your CRR. These two tools, these are the major tools which RBI has in their hands. Okay. Interest rates. Now, these are fundamental reasons we are talking of. Interest rates. Interest rate means what? You call it repo rates. Okay, now interest means what? Benchmark rates. Every country has different benchmark rates. Generally, all of them are now focusing on repo only. Repo. Okay. So, interest rates basically mean repo rates. Any country, kindly note, which is having lower interest rate, lower. Okay, any country who's having lower repo will always have a stronger currency. Generally, yeah. Any currency which is having a lower interest rate will have a stronger currency. Generally, except Japan is the exception. Japan is the only exception. In Japan, they have the lower rates also, and the currency is also weak. Why? Because they have themselves kept it. They have kept it themselves. Okay. So interest rates are lower. High domestic interest rates tend to attract the capital, right? So if your repo rate is higher, people will try to invest in your country main. That is main point, isn't it? If your interest rates are higher, people will try to invest in your country. So higher interest rate will lead to flow of more inflow of funds. Okay. I've just now shared it now. Okay, now I'll share it at the end. Okay, many students are joining. I'll share it at the end. Before going, I'll share the link. Okay. All of you, those who want to join it. At the end, I'll share this. Okay, because every time I'm sharing every 2-3 minutes. So that's wrong for others also. Chal, move on. So interest rates. Okay. So any country which is having lower interest rates will have a stronger currency, except Japan. Suppose if any country is having higher interest rates, people will try to invest in that country more. That's why you see we have so much inflows of foreign funds, this dollar funds. Okay. So high domestic interest rate tends to attract the overseas capital. Some of you might be investing in stock market. So you might be saying that, sir, what are you saying? Funds are high in the market. Nowadays, funds are going out. Have you seen this? In stock market, there is a huge fall, sharp fall. Why? Because FIs are going out of the market. So you'll say, how can you say that funds are coming in? That is the reason. See this. Funds are going out from stock market, but they are coming in the government bonds. All the funds which are going out of the stock market are moving towards the government bonds. Okay. So funds are in. So thus the currency appreciates in the short term. If any country is having a higher interest rate, suppose let's say in our case, we are having a repo rate of what? Around our repo rate is 6%, I think so. 6 or 5.75. Let me see. Present repo rate is, I think so, 6% repo. What is the present repo rate? Anyone? 6 only, yeah. Because they have still not decreased it. Yeah. Okay. No, Venki, that I'll discuss it later because FII going out is a negative impact for stock market. Okay. 6. So now what happens over here is our repo rate is 6 and US's repo rate is, if you check US's repo rate, it is around 4.5. Okay. It is around, I think so, 4.5. Yeah, 4.5. 4.25 to 4.5. So they have a lower repo rate. So what happens over here? Their investors or their citizens invest in our country because they are getting higher returns, isn't it? So that is the basic. Yeah. What is it started? Yeah. Yes, it is started. You are there in the class now? Yeah. Shall move on. Venki, we'll discuss this later. FII with retail investors. That is related to stock market. This is a this revision batch. Otherwise, if I go on discussing now, this topic is big. Okay. So interest rates. Got this point? Now, what are the tools available with RBI generally? Means what does RBI do? RBI does OMO and MSS. Okay. What is OMO? Open market operations. What are the open market operations? These things you must know basics because you will be requiring this later. OMO and MSS. Okay. Open market operations means what? Buying and selling of your bonds. Okay. Government bonds. Basically, T bills they do it under OMO. So buying and selling of government bonds is done, but that is done in the secondary market. Even they deal with the dated securities also. So buying and selling of securities is done in the secondary market. OMO is always for secondary market. Okay. What is secondary market? Primary market means IPO, whenever we issue it for the first time. Okay. And a secondary market means you buy the shares or bonds from somebody else, isn't it? It's like the buying the flat. When you buy the flat from the builder, that is primary market. Whenever you buy the flat second hand from somebody, so that is secondary market. MSS means what? Market stabilization scheme. Now this scheme is brought in, MSS is brought in by RBI whenever we have a huge cash inflow. Okay, cash inflow, huge cash. In that case, what does RBI do? RBI will take off the funds from the market. It will use reverse repo main. Okay, reverse repo. So that is basically interest rates. Kindly understand two interest rates are important, repo and CRR. Then political issues. Political issues means pestle. Political, economic, social, technological, environmental and legal. These are the main 6 issues. That is called as pestle. Pestle is asked in exam. Political, economic, social, technological, environmental and legal. Whenever any country has to grow, all these 6 elements have to grow. Okay. Now, technical reasons. These are the short-term reasons. Okay, short-term means what? Just for 1 month, 2 month, 3 month. That's it. Not more than that. Okay. So kindly note, government controls. Now, what is government controls here? In China, if you look at the Chinese market, government has a full control on their currency. Okay. What do they do? Whenever they want, they reduce their yuan. Whenever they want, they reduce their yuan. Okay. So they'll go on reducing it. Now this USA had put the sanctions now on China earlier. Now they have for 90 days they have removed it. But when they had put it, at that time there was only one option for China. That was to reduce the yuan again. They're planning to reduce the yuan. But if they reduce more, the yuan will be of worthless. See, here, if you go on reducing the currency of any country, it will become Zimbabwe. Check Zimbabwe's currency today. Zimbabwe or even that Venezuela. Their currency is gone. Peso. Peso was their currency. Gone. Everything is gone. You can't reduce your currency beyond a certain level. Okay. So government controls are, these are the direct controls. Now kindly understand, every government or every RBI has control over the currency in two ways. One is it can be directly controlled, second is it can be indirectly controlled. Now what is directly controlled? Direct means government decides. Means government will say from tomorrow the rate of my dollar and rupee, okay, the rate of my dollar and rupee are what, are from tomorrow it is, let's say, 70 rupees. Government will say, okay. So government will say means what? Whenever government says so, so that is known as a direct control. Indirect control means what? RBI will buy those dollars from the market. Buy those dollars from the market. Okay. If the dollar price goes up, okay, then RBI will supply the dollars in the market. If dollar price goes down, RBI will buy the dollars from the market. Okay. So that is known as indirect control. So that is allowed. Every country is allowed to have the indirect control. Kindly note. Direct control is not allowed. Okay. Yeah. So what? Both two classes at the same time. Praveen Rana sir and your classes. Here, that is, those are bilingual classes. Understand? We are in English batch. Okay. Those are bilingual. If you want, you can watch it later. Any of these classes, isn't it? But this is English, that is bilingual, so they can be at the same time. Only English can't be at the same time for the same for different subjects at the same time. Okay. So that is government control. Second one is what? Capital tends to move from lower yielding currency to lower yielding country to higher yielding. Means already I have told you. Repo rate. Wherever there is a lower repo rate, funds will move from the lower repo rate to higher repo rate. Okay. So USA 4.5, in Bharat 6. So 4.5 to 6. Currency will always move from 4.5 to 6. Speculative forces. Speculative means what? Brokers. These are brokers. Brokers means what? Always middlemen. Whenever you buy the flat, any flat also, at that time also that broker tells you, सर प्लॉट ले लो आज, एक साल बाद इसका भाव डबल होने वाला है. So that is broker who's speculating. So that is the same logic in currency also. Okay. Now you tell me. The term foreign exchange is used to denote dash as well as the dash of one currency to another. So this is basically used to denote the currency. Okay. It used to denote what? This is from your book only. Huh? This has been taken directly from your book. So it used to denote the foreign currency, means dollar or pound. That is this, or the dash of one currency, exchange. Okay, so this is foreign currency and second is exchange. The exchange rates of major currency fluctuate every dash seconds. Now the exchange rate will fluctuate every how many seconds? Second answer. No, 4 seconds, not 30. Okay, exchange rates of major currencies fluctuate every 4 seconds. Every 4 seconds they move. Okay. Nowadays, not even 4 seconds. Means nowadays we are so fast that in microseconds they change. Okay, but then also for your studies it is 4 seconds. The forex markets are dynamic and round the clock. So this is true, obviously. First one is true. Forex markets are not affected by government policies. So that is obviously false. Forex markets are not affected by government policies. Obviously false, no? These are affected by government policies. A large part of total global forex turnover results from global commodity trade. Third one. What do you think? A large part of global this trade, forex trade, okay, comes from global commodity. What do you think? It is false, isn't it? Because commodity is not a major player. Major player is money shifting. Okay, commodity is not a major player. How they change? They change because of demand and supply. See this, the forex markets or the forex rates which change in any, means for any currency. So these changes happen because of demand and supply. Everywhere it's demand and supply. Okay. Most of the forex deals are done on spot basis. Now, what is spot? You have studied this in your JIB, but again, let's study. One is cash ready, same day. Tom, next working day. Spot, next to next working day. Or we call it second working day. See, the word over here can be used as second working day. So that is also allowed. Huh? Spot is next to next working day or second working day. Forward is any day after spot. This you add it in your JIB also. Now kindly note, cash ready is not the same word. It can be cash also, it can be ready also. In exam they can ask you cash also, in exam they can ask you ready also. Okay. So cash ready same day, T plus 0 means I'll give you the dollar now, you give me the rupees now. Tom is next working day. I'll give you the this dollar today, you give me the rupees tomorrow. Spot is T plus 2, second working day. I'll give you the dollars today, you give me the rupees day after tomorrow. Forward is any day after spot. So after day after tomorrow, any day, you will be using forward. And what is future? Future is basically organized forward. Kindly note. Future is organized forward. This is the something which you need to understand this. Okay. Kindly note, future and forward are actually same. Future and forward are actually same. Okay, they are not different. Then why two names? If they are same, why do we have two names? The two names because future is organized market. Organized. Whatever you trade in the stock market, okay, whatever you trade in the stock market is a organized market because you have NSE and BSE, right? You have NSE and BSE. But whenever you trade between two friends, suppose you and your friend deal with each other, something, any transaction, so that is unorganized market. There's no one in between. Okay. Similarly, in forward also, forward is unorganized market because there in forward you have only two parties. Generally, it's a bank and a customer. Okay, bank and a customer. So that is forward. See here, it's simply giving like the selling the dollars to your customers. Whenever any customer comes to your branch for buying the dollars, you are using the forward market, means forward or spot. If you are selling him right now, you are using the spot market. If you are selling him for the future after 2 months, so that is called as forward market. So kindly note the difference between the two. Spot, forward and future. Forward is always unorganized market. Future is always organized market. In forward you have two parties. In future you have three parties. Buyer, seller and exchange. See this, I have written it over here. In future you have three parties. See this. Forward you have two parties, buyer and seller. Future you have three parties, buyer, seller and exchange. Okay. The date of delivery of funds on the day date of delivery of funds on the date on which the exchange of currency actually takes place is referred to as a value date. Now what is value date? Value date means whenever I am going to give you the money, means T plus 2 is a value date, T plus 1 is a value date. You give me the dollar today, I'll give you the money tomorrow. So value date is tomorrow. Okay. Now how are the forward rates calculated? Again JIB question. Forward rates are derived from the spot rates and are the function of the spot rates and forward premium. What do you mean by this? See here, forward rates are always dependent on spot. Okay. Spot means what? T plus 2. All the transactions are done on T plus 2 basis. Kindly note, few things you be very clear about it. Whenever you are dealing with funds for today only today, right now. Okay. Right now means T plus 2. There's no risk involved, there's no time involved. So in that case, we use spot. Whenever you deal in funds or dollars for future date, okay, means suppose if you are giving some funds for 7 days or 15 days or 1 month or 2 months, then you are dealing in forward. For finding the forward rate, you have to use the basis spot rate. So forward equals to spot plus premium. Spot plus premium. Or if it is discount and spot minus discount. Okay. Forward is spot plus premium or spot minus discount, whatever it is. Now, what is premium? What is discount? Premium means whenever the future date or future value of the currency is higher than the present value. Expected value of the currency is higher than the present rate. It's called as premium, right? Means, for example, why will it be higher? Suppose if today dollar is, let's say, 84. Okay, so if your dollar rate is let's say 84, yeah, it's a BFM revision batch. What is this? Kadapa, your classes only, but only not as per the schedule. Achha. So, investors. Sudeep Bhattacharya, how increase repo rate attracts the investors. I'll explain you in one or two lines only. I won't go beyond that. Because otherwise, if I go on explaining, things will be too high, too far off. Okay, so I'll explain you, not an issue. First, you understand what is there in CIB. Afterwards, we'll go for the economy. Okay, so spot rate is basically, remember, 80.2333. 80.2333. Okay, 2333 means what? 23 is buy, bid. See this, there are two names to this, bid or buy. And 33 means there are three names over here, offer, sell, and ask. Offer rate, sell rate, and ask rate. Anything can be said about this. Okay. So 23 and 33. Got it? So kindly note, your spot rate is given as 80.23 oblique 33. It means what? Suppose if I have to buy the currency, if I have to buy the dollar, I'll be buying at what rate? I'll be buying at 80.23. Okay. And suppose if I have to sell the dollar, I'll be selling at 80.33. So right side is always sell, left side is always buy. Be very clear about it. Okay. Now, this is my spot rate. Now, same logic I'll use for 1 month. 1 month forward. Means what? If I want to buy the dollar after 1 month, then there's a premium involved. Premium or discount, anything it can be. See this, it is 1020. So it means what? For buying the currency, I'm having 10 points. And for selling the currency, I'm having 20 points. So what does this mean? Whenever you have higher points for selling, see this, you have higher points for selling, 20, then your currency is at premium. Whenever your right side is bigger, you'll always say that your currency is in premium. Whenever you have right side bigger, your currency is always in premium. Okay. So now, suppose if I want to buy the dollars after 1 month, I want to buy the dollars after 1 month. So the rate will be 80.23 plus 10. Plus why? Because it's in premium. Whenever you have a currency in premium, then let it be buy or sell anything. Let it be buy or sell anything. You will always plus. So now you tell me what is the rate for buying 80.23 plus 10. So 80.33. Similarly, suppose if I want to sell the dollars after 1 month. So 80.33 plus 20. 80.33 plus 20. Okay, got it? So it will be 80.53. I'll be selling the dollars at 80.53. Got it? Okay. So what was the question, Sudeep? Increase repo rate attract investors. Obviously, if your repo rate is high, means what? Government is giving you higher returns. Simple, isn't it? It's like the FD, bank FD. Okay. Suppose if government is giving me 6% now, repo is 6. Tomorrow, if repo rate increases to 7, what does it mean? If I am the investor in foreign country, so I'll think that if I'm investing in India, Bharat today, I'm getting 6%. Or after 1 month, if it is 7, then if I'm investing in Bharat, I'm getting 7%. So I'll be having higher returns. So it will attract the investors. Got it, Sudip? So move on. So 10 to 20, correct? So that is premium. Now you guys tell me, suppose if the rate is 80.2333 and my future, this 1 month rate is, let's say, 3040. 1 month rate is 3040. 3040, 1 month rate. 3040. Now you give me the buy rate and sell rate. Everyone. Your rate is 3040. Okay. Now you give me the buy rate and sell rate. Everyone, give me the buy rate and sell rate. Yes, 30 40, yeah, 30 40. So buy rate is what? 80.53. 23 plus 30, yeah, and 33 is 40. No, sell is changing. What did you give, Abdul? You gave 80.5363. So 63 is wrong, 53 is right. So 33 plus 40. You have not added 33 plus 40. So it is 33 plus 40 is what? 77, 73. Yeah, it will be 80.53 and 80.73. Got it? Clear? Concept clear? Chalo, move on. So now this is premium. Got it? That is premium. Now about discount. Look at the 2 month rate. What is 2 month rate given? Correct. Everyone is correct. 5 3 and 6 3 is wrong. Those who are writing 6 3 is wrong. It is 7 3. It's not 6 3. Huh? Because you have to add 33 plus 40. You don't have to add 23 plus 40. Okay? Clear everyone? So now, those who are watching on YouTube, kindly join the classes ASAP. Some of you are watching on YouTube right now. Kindly join the classes because today is the only lecture which is free. From tomorrow, we'll be starting with numericals. It's not that easy. Okay? If you miss on the numericals in BFM, gone. You can't clear the paper. Be very clear about it. You have roughly 35 to 40 marks case studies, out of which around 30 marks will be numerical case studies. 25 to 30, 25 marks at least. Case studies, 5 marks. So 5 case studies of numericals you may have. And 1 mark also many. Okay. So that's why without numericals you can't clear BFM. Now second, see this 2 month. 2 month rate is at discount. What do you mean by discount? It is 30-20. See, whenever you have sell rate as lower, whenever your sell rate is lower than the buy rate, then you'll have the discount. In discount, what do? You subtract it. Subtract. So subtract means what? If I want to buy rate now for 2 months, so 82.23 minus 30. 82.23 minus 30. So 79.93. Similarly, 80.33 minus 20. So 80.13. Okay, got it? So whenever you have 2 months means a discount rate, you'll have to subtract it. Kindly remember this by heart. Okay. So let's look at it. Let's look at this problem. Today also let's do some 1 or 2 numericals, then we'll stop. The following is the interbank rates quoted in the foreign exchange market. Calculate the rate for inward remittance and outward remittance value, assuming spot rate, assuming a margin of 10 paise over the interbank rate. Spot is given as 75.0050, 75.0075. So now what we'll do, I'll ask you the question. Let me see. Okay, now let's try this. You try this. Okay, so what is the rate? Margin of 10 paise is mentioned. Always now, few things let me clarify on this point. Okay, whenever you have any forex problem, any forex, any forex, you have to look at 3 things. 3 points you have to always look at. One is buy or sell, buy or sell. This is what you have to look at. Buy or sell. Second, you have to look at the forward points. Forward points. And third, you have to look at the TT margin. TT or also it's called as exchange margin. TT or exchange margin. So any name can be then there. Exchange margin. Okay. You have to always look at these points. These are the basics. Any forex problem, you have to look at these points only. So what are these? What are these points? Okay, these points are these. See this. Whenever you have buy or sell, see this, I have written it over here. Buy or sell, premium discount means this is related to forward points and TT margin. Always focus on this. Whenever you have to buy or sell, for export you'll have to buy. Whenever you have inward remittance, you'll have to buy. So where do you buy? Where do you have buy rate? Export and inward remittance. Export and inward remittance. You'll always buy. In export, you'll always have inward remittance only. Inward means what? Money is coming in. Dollar is coming in. So that is inward. So whenever you have inward remittance in any form, let it be export, let it be NRI sending funds, in any ways, you'll have to always buy. So what is buy? This should be very clear in your minds. Kindly note, you should not forget these 3 points. Whenever there is an inward remittance, you'll buy. Okay, whenever there is an export, you'll buy. Reverse is also true. Whenever there is an import or outward remittance, you will sell. Import or outward remittance, you will sell. Now, what the forward points? Whenever you have premium, you will always add. Let it be buy or sell. Let it be buy or sell. Whenever there is premium, you will always add. What is premium? Just now I told you. When the right side is bigger, right? Whenever you have discount, you will always subtract. You will always subtract. Okay. Then TT margin. This is new term to you. TT margin, or we call it exchange margin. This margin you will always have to pay to the stock market. Okay. TT margin you will always have to pay to the stock market. So TT margin, what is the TT margin? See this. TT margin is basically whenever you are buying anything, you will subtract the TT margin. Whenever you are buying anything, you will subtract the TT margin. Whenever you are selling anything, you will add the TT margin. Okay, whenever you are selling, you will add. Now in this case, let's look at this case. So this case is like this. Interbank rate you want, right? 75, both the rates are required. Inward and outward remittance. Both are asked. Inward means what? Buy. So you require the buy rate. So 75.0050. And what is the what did I say? I told you we have 3 parts to look at. Buy or sell, forward points and TT margin. But in this case, there is no forward rate because everything is done at spot. Right now I am doing it. Forward means what? Whenever when do you use the forward rate? These forward points. When do you use them? You use the forward points when you are dealing in some future date. I want the funds after 15 days. I want the funds after 1 month. Dollars after 1 month. So that is basically forward. So here forward is not asked. Forward is 0. So this is 0. Now what the TT margin? It's obviously mentioned over here. 10 paise over the interbank rate. 10 paise. Now what about this 10 paise? If you are buying, you will subtract. If you are selling, you will add. So in this case, what will you do? Say this. 75.0050 minus 10 paise. So 10 will be over here. Look at this. 10 paise is over 0.100. It's not 10 is not on the right side. 10 is immediately after the point. So your rate will be 50 will be same. 0 is over here 9 74.9050. So your buying rate or inward remittance is 74.9050. Inward. Okay. This will be a inward rate. Inward. Okay. This will be a inward. Now what about the outward? Suppose if I want the outward rate, is it given? Let me see. Yeah. See this outward rate. So what is outward rate? Outward means what? Right side. Sell. You are doing, see here, whenever you are doing the outward, you are selling. Selling means right side. So 75.0075. First is sell. Then next is what? Do you want forward rate? So no forward rate because problem is of spot only. So that is 0 now. What about the TT margin? TT margin is 10 paise. But TT margin for selling is what? For selling is always plus. Right? TT margin for sale is always plus. So what do you do over here? This is wrongly calculated over here. See this. Plus. Let me see this. Huh? Hold on. Hmm. Hold on. Just give me 1 minute. Huh? Yeah, this is given done over 10 paise over here. Yeah. So it is plus. I think so. Let me check in your book. What do they say? Practically, we do it differently. Okay. Yeah. 1075 and this. Just give me 1 minute, huh? Because you have to follow your book. That is very important. That is the worst part is you have to follow the book. So whatever is given in your book is your Bhagavad Gita. Yeah. It's 1-0, no? That's what I thought. Yeah, Shiva. I thought because I've seen it somewhere in your book. So what you do, guys? You follow whatever is given in your book only. Don't follow this way because your book is prime importance. Don't follow this. Follow whatever is given in your book. Don't go beyond the book because your marks are always dependent on the books. Practically, what happens is different. Follow this only. Okay. So here I've done it as per the books. See what you have to do 75.0075. So plus 10 paise. Take 10 paise on the right side. Actually, actual way of doing it is left side after point, but your book requires it on the right side. So do it right side. So 75.0075 plus 0.0010. So it is 75.0085 outward. And for inward, it will be again different. 75.0050 minus 10 paise. So 0.0010. So it will be 75.0040. This will be your this buy rate. This is the outward, this is the inward rate. Okay. Yeah, that's what I thought, Shiva. Even I have seen this in the book also. Okay. In book, I think so they have given 10 on this side only. Hmm. One sec. I'll just check in the book. Okay, no problem. Tomorrow morning we'll start again. Okay. ABM, BFM, BFM. Tomorrow morning we'll start again. One sec. Uh, 50. Hmm. Take this. See this. I've opened your book only. Hold on. What have they taken? 1075. 0075. No. See this. All you guys check this. I've just checked in the book. That's what because practically what do we do is important. This one. See this. Your book says that what we did earlier was correct. I thought it is this way. No. See what your book says 75.00750 and here point 1 is deducted. So earlier what we did was correct. Similarly over here. So 75.0075 and subtract point 1 over here. Point 1. Okay. So point 1 is to be subtracted. Okay. So we'll stick to the earlier way, what is correct way. Practically also we do it that way only. Because when okay, I was working in this department only. So this method don't follow. This earlier method is best, is the correct one. This don't do it 0 0. This also 0 0 out. Follow this earlier method, which is this is the best way. This is the best one. This is the correct one for this is for inward, inward, and for outward it is outward, outward. Okay, 75.0075 minus. Okay, plus sorry plus 0.1075 okay, so it will be 75.1075. That will be our outward remittance rate and this will be your inward remittance rate. Okay, yeah, it is written that way only. Means I thought is it written 00, somebody gave me. Yeah, no, Shiva, it's in the book, it's written as 0.10 only. Huh? So follow this only, because in practically also we do it this way only. Practically in the bank, whenever you work in forex, you do it this way only. 10 paise is always taken as point 0.1. It's not taken at the end. I thought it is in your books, it might have been given like this way, but it's not this way. Okay. Practically they have written it correctly, whatever is followed in the banking system. Okay. Chalo. Let's start tomorrow with the numericals. Huh? Directly numericals will be starting. So those who are watching on YouTube, kindly join the classes ASAP. Officers Adda, download the app and then purchase it. You will be getting higher discounts, 1% higher. Use the code this Y432, okay, for getting 80%. Okay, link, WhatsApp link. Yeah, correct. WhatsApp link. Take this WhatsApp link. All those who have joined new, take this WhatsApp link and join the classes. From tomorrow, we are having from 6 a.m. to 8 a.m. Okay, 6 a.m. to 8 a.m. Morning 6 a.m. to 8 a.m. Morning 6 a.m. to 8 a.m. Morning class, and evening also we are having it. Evening I'll just check, but we are having it. 8 to 9 we are having it. Okay. Tomorrow morning 6 a.m. to 8 a.m. we are having the class. Chalo, bye.